Guys, good morning.
Excellent. Sit down.
It's absolutely amazing. Two presentations we could see. So I'm just wondering, what do we speak? It actually covered the entire spectrum of AI. Then, while seeing the second presentation, I remembered a kind of a dialogue during our times. Dunya mutti mein hai. So today, I think I was able to link that particular tagline to the second presentation, what relates to the WhatsApp or the SMS technology where it is evolved today. I think everything is in our mutti. Yeah, so with that, I think we're going to talk about the NBFC, the new trends, the AI, the digital transformation, and the new challenges and way forward in our industry. So before that, one thought in everybody's mind. So do you all remember when was the first nuclear bomb was bombed?
Yes.
Can you all remember the date when the first nuclear bomb was bombed?
Earlier.
Okay, any idea where, the place?
Someone I said.
Sorry? Hiroshima. Okay, any date? Any idea on the date? Okay, I think it happened on the 6th August 1945. It's too very long a time. Can you all imagine? The AI technology was used for bombing the first nuclear bomb. Guys, imagine 1945. So where are we now? Just a thought in your mind. Okay, the world is evolved in a different forms and avatar. I would say I personally started in 1995. It was a very different journey. We started with pagers. Then came your mobile phones as big as your pencil box. And then came CDMA phones. Then came the Android. I was just asking my HR, okay, why do I have to change to an Android phone? Can you imagine today, everything happens on a mobile phone. So I think we are in a tsunami of technology, and the digital world is taken a new avatar. And I was just saying to my good friend Natarajan, during the earlier times when there was an NBFC conference, we could see larger finance companies or banks taking part, and we had very few technology companies. Today it's all about technology, and each one come with very different forms of usage for that one person who's called a customer, how you're going to service him and make him delight. So in my perspective, though, with whatever experience I have, there are 4 critical factors which I always looked upon, okay, as an NBFC. The first thing would be the customer experience. Okay, how is he engaging with you? The second would be the operational efficiency. Are we giving money on time? The third would be the current scenario, data-driven intelligence. How are you using our data the most effective way? And the last but not the least is a financial insight, that is control. I think our business is evolved around these 4 parameters as we progress. We could see digital and AI transforming into a different forms, but the fundamentals remains with these 4 factors is my strong conviction. So with that, I'm extremely happy to have a very power-packed speakers who comes with a lot of wisdom, learning at their own journeys. So I'm really proud to be, and also thank Elite team for giving me this opportunity. I think I will go with Mr. Natarajan, and I would like to know from his perspective about his journey and kind of a background to AI and digital. Yeah.
Yeah, good morning, Kumaran, for the wonderful introduction about the theme. And also, I would like to thank the organizers for the opportunity given to us to explore the topic much further. And I think in the first round, we are going to do the context setting. And I'd like to really talk a little bit about our journey and then how the technology has helped us to be where we are today. We are a micro-lending company. South India Finvest Private Limited is a micro-lending company. And in the last now, in fact, when I was here last time, I was part of the same panel in August 2023. If I remember the month correctly, we were about 300 crores. Today, we are almost about touching 1,000 crores actually. So in the last 1 year, I would say we have blitzscaled. I don't know how many of you have read that book. In fact, that's what we have been going through. So I think the scalability in India is almost given. There is no problem with the demand for the finance services, given the macro outlook of the economy. There's no problem with the growth opportunity. I think the differentiator is going to be how you capture the demand in the most really, quality and the sustainable manner actually. I think that's where the technology comes in. In my view, technology is both a leveler and as well as a multiplier, right? So leveler in the sense it's available to all of us actually, right? So that's the number one point. So there's no problem with in terms of availability. So it's a leveler. Now, how do you convert the technology into a multiplier? I think that's where how do you really there were two presentations earlier on. I mean, Siddharth talked about really how AI is going to really play a role, and the other presenter talked about really how the new technologies are emerging. So I think how do we weave different technologies in your really lending process, right from really onboarding all the way to the collection. This is going to be the differentiator in our view. I think one of the things that we have done well. I mean, of course, we are still a long way to go. Is to leverage the different technologies available in various really touch points of the customer, right? And so that said, I think lending business will not be sustainable if the quality is not good actually. I mean, I think in our view though, we have blitzscale over the last year and a half. Our quality is one of the industry best as a quality. So I think with that said, Kumaran, you talked about really the four aspects of how is technology impacting the customer efficiency, how technology is impacting the operational efficiency, and how it's also really overall efficient the organization quality. In our view, as we scale, I think everybody, I mean all the NBFCs who are present here is going to scale. I think they will grow at least 30, 40, 50% every year. But I think the quality of the growth is very, very important, and how each company is deploying the technology. And I'm here to really learn as much as we have. And in the next round, I'll share about our own technology, really implementation at various levels. If you want me to go further, I can go. But I think so. With that said, I think we are in for an interesting times in terms of the technology tools that are available for us to go and really capture the demand opportunity India offers. So with that, I'll just stop here and take your questions on second round. Yeah. Thank you.
Oh, very nice, Nataraj. I think that is a great insight. And also personally knowing you and your journey has been absolutely fabulous, and all the best for you. Now we have another industry veteran, Mr. Guru. A great insight on the social responsibility because the business itself is all about social responsibility. I will not take much time. I am also keen to hear from him. Hear to you, Guru, about your perspective about the NBFCs and the digital journey.
Thank you, Kumran. Thank you all. Good morning to all of you. Thank you for the sponsors for this program. My name is Gurunath. I am the Executive Director of Samunnati. Samunnati is an agri value chain finance company where we do the calf to curd kind of a support or farm to fork kind of a support in the field of agriculture. We not only look at lending to one type of activity, but to the entire value chain. And we strongly believe that technology is the only tool for us to scale. As we speak, we are in the 10th year of our operations. And we have absolutely seen how technology has helped us to scale. We do about 400 crores of business a month as we speak. And to take this to around, say, 700 to 800 crores a month, we cannot have 2x of people to do the same, but we have to have a technology which can really support the scale as well as within the agreed turnaround time, because the ticket sizes are not a standard ticket sizes. We do somewhere from a 50,000 loan to a 15 crore loan. That's a kind of a pendulum swing we have. The initial point what I would like to share is, any organization when they look at technology, it has to be in a sequence where we should find the ways to automate first and then move to technology. The simplest example I always give is you look at FASTag, which is nothing but automation of what used to be a manual collection of toll fee, where the moment it was automated, the kind of time which it has saved, which it has saved for most of the users is magnificent. But what next beyond FASTag is what we have to see when you have to look at now. The next pain point for people is, okay, I have to go and stand there for about 10 to 15 seconds. How can I avoid that 15 seconds is the next thought process which is coming to our mind. So maybe a technology intervention of that could be like you have high-speed cameras where you need not stop, but the moment you pass through that place, which is there in most of the Western countries, but I'm sure we would be coming to that, is the way in which we should look at technology for lending organizations, especially where we have customers to be served at the shortest possible time, because especially in the field of agriculture, it's all seasonal. You cannot say I will give you more money at a lesser interest rate, but after 2 weeks it's of no use to a farmer, because the farmer needs money today, and even if you give it tomorrow, it's of no use. Is the approach we are taking. So we will come back to what kind of technology we have used in the subsequent rounds.
Oh, I think fabulous. And I should also mention that Mr. Guru was actually one of the first set of employees of ICICI Bank. Can you just imagine, way back? Thanks, Guru, for your nice insight. I will also go to Sundar now. Again, once again, a very industry stalwart with a lot of wisdom and learning. I would like to know from you, sir. I think today we talk about P2P lending, which is a regular form of business model today. So I would like to ask you to throw some light on the P2P model.
Good morning to you all. Happy to be amidst a set of learned people and also people who are looking for what's happening in the technology area as far as finance is concerned. I'm proud to be associated with Monexo FinTech. We are a peer-to-peer lending marketplace. Probably the only Chennai RBI registered P2P company in this category. There are around 25 companies in the country as of now. So there is as a result of that, we also have a challenge to establish as a most successful company. The RBI has given us that mandate as well. So as a peer-to-peer lending marketplace, I'm going to talk more about our company because it's a new type of NBFC. So there is a lot of technology evolution that has happened ever since we were born. So we started our operations sometime end of 2016, even before the regulations for this industry came. So that was sometime in October 2017. So we had the challenge of establishing certain practices which were supposed to be ideal or the way to go for the industry. So we were, I don't know how many of you are aware of how a P2P process works. There is a escrow bank and also an escrow administrator, which is a trust company who moves or controls the flow of funds between the borrower and the lender. Because of our prior experience and the need to keep the funds away from a platform, we thought of this escrow operations even before the regulations came. When the regulations came, it was almost the same way we have structured it. So there were a lot of challenges as a fintech company in terms of making more of automation. See, one of the vision Mr. Mukesh Bubna, who is our CEO, had, or even now we are working towards it, is that somebody needs a loan and he is on his way from his office to house, right? He is on a bus or a mobile metro or an electric train or whatever it is. He applies when he starts from his office, and by the time he reaches home, the loan should be in his bank account. That's the kind of vision with which we started. This is irrespective of the timing of the day, 24/7, right? So we do have built-up processes which are very, very efficient in terms of these 24/7 operations, both for the lending side and the borrowing side. The lending side is predominantly people, normal people like us. So any individual can be a lender on the platform. Borrowers are also small-time borrowers, predominantly small ticket personal loans, and we also have a huge presence in social impact loans, basically JLG type of loans. That's it.
Oh, wow. Fabulous. I think it's a very different kind of a business model. Most of the times during our discussion on business enhancement, we always speak about how do we innovate a new product or how do we come up with a new ideas or a product. I think this is one everybody should look upon and see how you can discuss and take it forward. I'm also really honored to have Mr. Ramesh, ex-SBI and a very seasoned veteran in the industry. Sir, your perspective about your organization and your digital leveraging of your business and how does your business work?
Thank you, Murugan. Good morning, everyone. It's a privilege to be a part of this panel and this conference, which is very apt considering the speed and the complexity with which the financial sector is moving today. I started my career in State Bank of India. I was a Chief General Manager in State Bank of India. During the course of this journey, I've seen both the pain and the power of adopting technology. We started with very, very primitive back office computerization systems, where we have gone through the pains of converting from a completely manual thinking mode to some kind of an automation. And then moving forward, then I networked the entire foreign exchange reporting branches of State Bank of India, numbering more than 500, into one integrated network to be able to report online for the first time rather than through post and other channels. And then we moved on to bigger platforms of using software, including automation of all our foreign offices and subsidiary banks when I was heading the international operations of SBI. So there have been different kinds of journeys. But the journey that we are seeing now is very different. I moved into the private sector through an NBFC. Then I founded a housing microfinance company, which was a pioneer in the sector. Then into microfinance itself per se, and then now a NBFC. Ours is a multi-product NBFC, but with a major focus on social impact loans and more of customized innovative loans in terms of, say, loans like education loans for rural families for educating their school children in better schools, or a roofing loan, which is for vulnerable coastal and high rainfall communities to be able to have a medium-term solution before they can go upgrade to a full-fledged new house, because they may not have the wherewithal to be able to even pay the EMIs for a new house, and so they may not be ready. But then they need to upgrade their shelter very quickly. So we have come up with an innovative roofing loan product, which is a package of financial, technical, and knowledge initiatives put together. So different kinds of journeys are happening, and we are also into financing micro enterprises and livelihood loans also, and certain supply chain SME area also we are looking into. So when I look at this long journey, earlier we were using major platforms provided by financial service providers. It may be an Infosys or a TCS or a Satyam Computers in those days or others. Now the scenario has changed a lot. We are not looking at very complex single platforms. What we are looking at is now the ability to integrate different new features coming from different innovators in the fintech sector into an existing organic whole. And that is where the power of API has really made a huge difference. Today, you don't need to, when you want to upgrade your platform, you don't need to really upgrade your LMS into very complex, bigger platforms. You can still have a reasonably simple LMS and be able to plug in a lot of very interesting, very powerful softwares and create a great customer journey without going through a very big pain of transformation of the entire organization. I think that is very important, and that is the journey that now all of us will be seeing much more. And when we look at this, what are we really looking at today? We are looking at a financial sector where there is a lot of disruption through technology adoption. There is a lot of chasing of speed, transparency, and customer acquisition. And all of these are becoming enabled only because we are able to lay our hands on a lot of very innovative software features and so on, software producers, which that fintechs are coming up with. The fintechs are actually chasing the demand, huge demand that is there, and trying to create features and platforms. But what we are also seeing at the same time is where the regulator is coming in and saying, you can chase the demand, you can facilitate the connection between the money and the need, but you cannot substitute the lender as a fintech. So this is, with the new regulations, I think this has become a very important part of transforming the fintechs in their journeys, not to look at themselves as substitute financial service providers, but as facilitators and those who are complementing, not substituting the traditional financial services.
So thank you so much. I think you used the word chase. So it only tries to link my what a thought process in this journey. As a finance company, or as a bank, or a fintech, there are three critical factors each one has to carry home. And irrespective of the technology changing, AI moving to a different avatar, it doesn't matter. But if three, what is a philosophical thought process just goes into your business model when you built in a strong, robust business cycle. So the first one would be the social responsibility. Does your business model has a kind of a social responsibility? The second comes as a social cause. Is your lending activities towards a social cause and building a society? The third comes as customer centricity. Do we really have a customer centricity in our business model? So I just leave it there, a small thought in your mind. You can carry this home. Next, I would ask Mr. Natarajan. I think that the digital is actually evolved in a very different pattern today. Okay, we were talking about digital a few years back. Now it has taken a new dimension now. So I would look at, or I would ask you, okay, how is digital leveraged in your business and your perspective on that? Okay.
You know, as I was mentioning before, in India, I think we are fortunate to have this DPI, right? The digital public infrastructure, in terms of really, you know, the JAM Trinit really like, you know, work towards really establishing this DPI. I mean, like, you know, we have a huge database, right? Okay. Now, you know, with that, you know, what we have realized, what we have really realized in our own journey is, like, you know, when we have blitz scale, okay, almost 3x in the last 1 year. I think with that, the complexity is increasing exponentially as well. I think in all the businesses complexity, I think the one way to really reduce the complexity is, like, you know, the first step in our journey, I'm sharing our own perspective, is really, like, you know, digitize everything that we do. I mean, that's the first realization that we really went through. And in our journey, like, you know, onboarding, of course, you know, we don't do any papers. Actually, everything is through eKYC, okay? And then there is an eKYC. Of course, people, you know, people are onboarded through biometric. That is the other database, like, you know, we verify the authenticity of the really customer. That's the first. I mean, Ramesh talked about the API. I mean, like, there are multiple APIs that work in tandem to really, like, you know, verify the authenticity of the customer. That's number one, right? once that is done, and the second stage of really like process is how do you really verify the credit worthiness of a customer? I mean, KYC is fine, it's done, so the customer is authentic, and then is the customer credit worthy? That's the second stage of really like onboarding. I mean, underwriting process. Probably we are one of the few companies in India where we are leveraging a video platform to monitor the customers, okay, real time on the field. Because just to give you the scale of the operation that we have, we are operating in about really 8 states. Okay, we have little more than 200 branches right now, and we are in micro lending business. You know what we offer is anywhere between 40,000 rupees to 1 lakh. We don't offer beyond that, right? Okay, and we also offer mostly to women entrepreneurs. So basically, what happens is there's a lot of really heterogeneity in terms of the customer culture and also behavior. How do you really homogenize, okay, the kind of variation that is there in the customer thing? So that's why we have really taken completely away the decision making power of the field officers all the way to the HO. So what we're doing is we have streamlined the credit underwriting process across all the 8 states that we are operating through a video platform. And by the way, this is available for KYC. The RBI also recommends the KYC video, but we are using it. KYC is done through the other platform. The other time is up. I'll take 1 minute and I'll finish it up. So the second aspect of this is we are the only company which we are really monitoring the video, the underwriting process through video monitoring through our HO, and this video is stored for the duration of the loan, 2-3 years, whatever it is, it's stored. Right. Third aspect is also when the customers come to our branches and whatever, we are also really digitizing the entire transactions. Right. The fourth aspect is the collection. We are trying to really move towards completely digital collections, and not only any customer who is not really paying digitally, we are also trying to record the conversation. I think, and I was talking to Mr. Guru earlier. I think lending business is all about really risk mitigation, right? And at our company, I follow one phrase that I've given to all my team is basically how do you get everything right every time. Okay, but in real time. That's where the technology comes in. I think there's no post-mortem. Once a loan is done, it's done, right? Okay, if you made a bad decision, it's done. So we follow that. We leverage technology to really trying to get everything done right every time, but in real time. That's my journey. I think we can talk more in detail. If anybody has questions, I can take later on. But I think that's where you build the quality by leveraging the technology. As I said, it's a leveler for all of us. But how you really weave your technology tools in your process and really make the quality absolutely top notch. Actually, right? Thank you.
Oh, fabulous! I can only make one statement in your business model is, I think you all actually create an impact. Okay, when you say you fund a woman entrepreneur. Okay, that is where you create an impact. Wonderful. I think all the best for you. Guru, I think the world is changing, and most of the business are taking a new avatar, as I said. Okay, what is your views on the future trends in our business?
See, in fact, I would like to...
You just have 1 minute, sorry for that.
Harness upon how technology is differently used in Samannati, which should give a nice perspective. We have divided the customer segment into 3, where we can have rule-based digital platforms. We have created one. Where we can use artificial intelligence, we have created the second one. We work with a Singapore-based company. And where we can use blockchain technology is one segment where we have divided. So a straight-through process where we have used rule-based engines for our startup FPOs. We call it a instant pre-approved loan. We use the term IPL to be very fanfare. And we have been very successful in doing about close to 3,000 loans for all the startup FPOs where none of the banking system is ready to support them because of their nascent structure. They are just formed. They are less than 6 months. Whereas on the artificial intelligence, the matured agri-enterprises where we have more than 100 plus fields available, we use that data to come and take about 35 fields and come to an understanding where the underwriting is clearly coming out with those fields, and we are able to very clearly predict whether these cases would be successful with respect to underwriting as well as collection. So that is coming out to be very useful for us. On the matured pharma producer companies, we are using the blockchain technology, though I would say it is in the nascent stage, but it is turning out to be very, very effective and useful.
Oh, thank you so much. Sundar, I think your business model itself is very unique. Okay, and definitely when you build your business model, I think you would have definitely even kept the collections as one of the core areas. Your thoughts on the collections? Just 1 minute to go.
Yeah, so collections is an evolving area where we need to make more and more digital. We are present in two segments. One is the direct loans which are given to customers through a mobile app. That we do have technology to send them links to make the payment if they bounce the UPI NACH. So that the technology on that area is also evolving. A lot of integration happens even at the time of sanctioning the loan. We have to get the NACH mandate in place so that we can present it on due dates. And as far as the social impact loans, which we are partnering with NBFCs like Mr. Ramesh Kumar's company, it's evolving still because of the sheer nature of the microfinance loans. There is a huge amount of collection happening. We are working towards digitization there. It's an evolving process. Of course, the communication to the customers is continuously happening over a digital mode or through automated voice recordings and things like that. It's an evolving scenario and it is increasing every day.
Thank you so much. I think I have one last to go. Definitely, okay, as an NBFC, we are very, very regulated and we need to stick to the frameworks. Sir, your thoughts on our new changes and regulatory perspective to build a stronger NBFC?
Yeah, the regulator, if you look at their normal pattern, their approach is like a sine wave. They start with a soft touch approach in a new sector. They allow it to grow and then watch how fast and how safely it is growing. Then they come up with a hard touch and with a set of regulations. And then once it is matured, then again drop it to a soft touch regulation. That is what we are seeing now in the fintech and financial sector regulation. The fintechs which thought they were substitutes for traditional financial lenders have been told very categorically through the guidelines that they can complement, they can support, but they cannot substitute the lenders. The regulated entities who are very well regulated, they would only be the lenders. So this has become very important area. Also, the regulators now going forward need to look at what are the new areas where regulation can come in. Maybe are there new sectors to be opened up? For example, one sector comes to my mind. What about the aging population? Aging but longer living population in the country today. That is a sector which is becoming an underserved or even excluded sector. You say insurance, no life insurance beyond this age. You say this thing, no, nothing beyond that. Lending, no mortgage loans, nothing beyond this age, or any other kind of loans from the banks, etc. But that is a sector which again is a huge gold mine, really, in terms of lending sector. I think a lot of new innovations need to come in that area also.
Oh, thank you so much, sir. I think I would say what age is just a number. So I think for NBFCs who have actually evolved over a period of time, I think let's have a very happy ending. I think it was a fabulous panel discussion. Thanks to all my senior stalwarts in the industry. Thanks once again for the Elets team. I think you all have completed 21 years of journey. That's fabulous. Okay, and thanks once again on behalf of the speakers. Thank you so much.